So with all of this cash, will companies start making some deals, more deals? Joining us now, M&A expert Frank Aquila. Frank is also a partner at Sullivan Cromwell, and he's worked on all kinds of deals, including Diageo, sale of Burger King, and the Pillsbury General Mills merger. He's also a featured columnist for Bloomberg Businessweek, and his latest column talks about company cash reserves and the broader picture of what's going on with the economy. Frank, always great to see you.
Laurie.
So we heard Sue's piece detailing all this cash. Yesterday, Bloomberg broke the news about United Health's $1.5 billion all-cash offer for a private equity-held institution. I mean, what's going on here? Is it better for the overall economy to have deal flow with all cash, or is it better for these companies to get a little growth going and use that cash, deploy it for CapEx, hiring, of course?
Well, I think we all want to see companies start hiring people, spending on CapEx, which will feed internal growth, organic growth, and also make acquisitions, which is very good for the economy and very good for the market. A little bit of history, you go back to September of 2008 and the bankruptcy of Lehman Brothers. General Electric could not borrow on commercial paper at that point. The commercial paper programs that finance most U.S. companies basically shut down. I think most companies reacted to that. They cut employees, they cut capital expenditures, they cut dividends, they cut share buyback. So they conserved a lot of cash. I believe that companies are prepared to spend that cash, but not until they're convinced that they're going to see growth.
We had the Beige Book released at the top of the hour. The economist David Ressler was our guest, and he said just that. The issue here, the main issue, is confidence. So what's going to re-infuse confidence into corporate America?
Right. And I think what you're seeing is, and you report this day in and day out, that companies are missing on revenues but exceeding on profits. And so long as you can be profitable by cutting costs, I think that's what companies will do. Once they see that the environment is changing, because let's face it, if they can grow when the economy is growing, since they've cut their costs, become very lean, a lot of that profitability is going to fall to the bottom line. So they have every incentive to do that. But who wants to go out and build a new plant, hire 10,000 more employees, make a big acquisition, and then find that the economy is stagnant? So I think when we see a little bit of job growth and a little bit of sustained growth both here in the U.S. and abroad, my sense is companies are going to do the sorts of deals that you've been talking about.
So you're talking about just a little bit of a shakeup. Can you quantify that more for me?
Right.
I mean, because the earnings picture is very good. Excuse me for interrupting you. We're reporting day after day. We're midway through the second quarter earnings season. And by and large, most companies, with the exception of Goldman and Google, I believe, are beating the street. So what's it going to take beyond that?
I think what it's going to take is another quarter or so of 2, 3, and if we could get 4% growth, that would be great. I think it would be some meaningful decrease in unemployment. Not government employing more people, but rather private sector employment, seeing some level of activity. I think China is slowing down, but not too much. If we could see some level of economic growth in Europe, that would be a positive sign. Overall, we need stability. I think we have a certain degree of stability. Now it's just convincing CEOs and boards that growth is going to happen. There's not going to be a double dip. I tend to think it's unlikely we're going to get a double dip, but people still don't know yet.
And I know you were telling me you're spending a lot of time in boardrooms lately. So are you able to convince people of your very optimistic outlook?
I mean, my outlook is sort of a realistic outlook, and that is that, I don't know when we're going to get to 4% growth. I don't know when we're going to get to 7% unemployment, but I don't see it going in the other direction. I don't really see a recession happening, but it's a fragile economy.
Sure.
People had a very difficult time in 2007, 2008, and 2009, and you've recovered from that. You've gotten back from the brink. You don't want to risk it all at this stage, and I think that's what the concern is.
Frank Aquila, many thanks to you. Frank is a partner at Sullivan Cromwell and a Bloomberg Businessweek featured columnist.